In this video, we're looking at Adobe stock, ticker ADBE. So Adobe is one of the stocks that is owned by Terry Smith, one of the super investors that I follow. So we will look at the recent earnings report, their revenue, their earnings. We will look at the revenue by segments. And then in the end, we will look at several valuation metrics. We will use price to free cash flow multiple. We will use free cash flow yield and discounted earnings per share method to determine what kind of upside Adobe stock offers at the current price level. So let's get started. First of all, if you want to get updates on Adobe stock, Google stock, Warner Brothers Discovery stock, or get other stock investment ideas, please consider subscribing. Okay, so Adobe released their first quarter earnings report on 15th of March. The results were slightly better than expected, but within the range of expectations. So they brought $4.66 billion of revenue in the first quarter. This represents around 9% growth rate year over year. They also brought 2.71 earnings per share, which is again slightly better than Wall Street was expecting. What I like about Adobe is that from this 4.66 billion of revenue, around 4.4 billion is from subscription-based services. So the source of this revenue is from subscription, from stable subscriptions. And this is something I really like about Adobe. The subscription business model can be much more predictable and stable. And if we look at their Creative Cloud apps, for example, Adobe Illustrator, Adobe Photoshop, After Effects, these apps are widely used, and this is the source of their moat. So high quality, widely used apps are their competitive advantage. And if we look at the revenue by segment, we can see that more than half of the revenue is brought by digital media segment. Creative Cloud is part of the digital media segment. So 3.4 billion of revenue is brought by this segment. And this segment also grew around 9% year over year. Also, management provided guidance for the next quarter. The revenue is projected to be around 4.75 billion in the next quarter. If we look at their stock chart, we can see that right now the price of Adobe is around $352 per share at the moment of running the video. And this drop at around 15th of September is after the news about the acquisition of Figma. The price to be paid is around 50 times sales, so a very expensive acquisition. So if you want to make a deeper dive on this acquisition, please write in the comments below. So next, let's look at the current debt level of Adobe. If we look at their balance sheet, we can see that they have more than 4 billion of cash and cash equivalents and around 1.6 billion of short-term investments. So if we combine these numbers, we get that they have cash of around 5.6 billion. They have debt of around 4 billion, so they have more cash than debt. They have minus 1.5 billion of net debt. We will use this number later in our calculation of fair value. Adobe is not paying a dividend, which is a good thing for a growth company. They also have around 17.7% of return on assets and around 25% return on invested capital. So this is net income divided by capital, which is equity plus debt. Okay, so we looked at several numbers of Adobe. So is Adobe a good buy at the current price level? What kind of upside we can expect from the stock? So next, let's look at several valuation metrics. First, let's look at the projections of free cash flow in 2 years. So according to analyst projections that I was able to find, Adobe can bring more than 9 billion of free cash flow in 2 years. Right now, it trades at around 25 price to free cash flow. If we use this free cash flow multiple, we get that the projected market cap in 2 years is around 228 billion. The current market cap at the moment of running the video is 164 billion. So the upside in 2 years is very close to 40%. So the fair value of the stock should be closer to 500. So this is according to the first method, the price to free cash flow multiple. If we use another method, if we use free cash flow yield method, so this is something that I learned from Terry Smith. He also owns Adobe stock. So currently the free cash flow yield, this is next 12 month free cash flow according to analysts, divided by the current market cap, is 4.9. The mean free cash flow yield for the last 3 years is closer to 3.3%. So according to this metric, the stock offers close to 49% upside. And the fair value of the stock is $524 per share. So even higher upside than in the first method. So according to first two methods, we got around 40% upside for the stock. Let's use the third method. Let's use discounted earnings per share method. So what we basically do is that we take earnings per share for the last year, we grow them using the growth rate. So according to analysts that I was able to find, for the next 5 years the growth rate will be around 14%, multiplied by future price to earnings. So I used the current price to earnings of close to 34.5, and then discount them back to today using the required rate of return of 10%. After adjusting for net debt, so Adobe has more cash than debt, we get the fair value of the stock of close to $429 per share. So yes, less upside compared to the first two methods, but also significant upside of more than 20%. So we got an upside of close to 40% for the first two methods and more than 20% for the last method. So according to these metrics, Adobe offers from 20 to 50% upside from the current price level. Okay, so we saw the potential upside. What can be the downside? I believe the main risk investing in Adobe is their growth rate. So if the growth rate is lower, the stock may trade at much lower multiples. Technology is changing pretty fast. They have a lot of competitors. But overall, I like that they have stable and predictable business model, subscription-based model. So yes, Adobe has a lot of competitors, but they also have relatively predictable and stable business model, their subscription. So I believe Adobe offers significant upside potential. Also, if you want to know more about other stock investment ideas, here's the video on what about the discovery, what to expect after their recent quarterly report. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.